Investing in real estate can be an excellent way for investors to diversify their portfolios and attain long-term wealth. However, it's not always an easy process. Luckily, financial strategies like real estate leverage can help. But what is real estate leverage, and how can it help investors? Well, today we answer these questions and many more. Hey everyone, it's Alyssa here from Bay Property Management Group, your local property management experts, here to help owners throughout Maryland, Virginia, Washington, D.C., and Pennsylvania get the most from their rental investment. Before we get started, be sure to check out the link in the description below to our blog, which offers the latest industry news, plus advice and tips for rental owners, investors, and tenants. So with that said, let's jump into today's video. Leverage can help investors increase real estate net worth. But what is real estate leverage and how does it work? Real estate leverage is borrowed capital or other financial instruments used to increase the potential return of a real estate investment. The easiest way to leverage a property is by using a mortgage. Leveraging techniques are used by people and businesses worldwide. However, while the potential for good returns is likely, it's not guaranteed. For example, investors can experience more losses than gains if home prices decline. There are different ways for investors to use leverage to buy real estate. So let's go over a few of the most common types. Mortgages. Mortgages are the most common type of real estate leverage since most people use a mortgage for their primary residence and are familiar with the process. Additionally, you can get a mortgage from several types of financial institutions, like a bank, credit union, or even an online mortgage lender. Home equity loans or a home equity line of credit. If you already own a property, whether a primary residence or another rental property, a home equity loan or line of credit can help you leverage one investment into more properties. A home equity line of credit works similar to a credit card, except your property is the collateral. On the other hand, a home equity loan acts like a second mortgage and gives you a fixed sum that you repay over time. Business credit. Some investors don't realize it, but they may qualify for business credit cards and credit limits, which can then be used to finance new real estate investments. Investors can use these lines of credit to purchase a property outright, pay a down payment, pay for repairs, or use it to expand your rental business with marketing or property management services. Portfolio loans. Instead of using traditional mortgage lenders, investors can also apply for financing through a portfolio lender. Often, portfolio lenders are smaller financial institutions that aren't required to meet strict underwriting guidelines. That said, private lenders take on more risk, so they typically charge higher rates. However, they are easier to qualify for and can be more flexible for experienced investors. And lastly, private loans. If you have good connections with business partners or other people willing to back you up financially, a private loan may benefit investors who want leverage. In this case, you may borrow from a friend, family member, business partner, or another real estate investor. As such, it is crucial to create a professional loan contract to set the terms and avoid misunderstandings. Now that we've gone over what real estate leverage is, you may be wondering how it can benefit investors. Well, here are some of the main advantages of leveraging real estate. You can grow your portfolio quicker. When you use leverage, you can grow your portfolio quicker than you would if you had to save thousands to buy a property outright. Instead, you just need the down payment for the loan of your choice. Then, if you can afford the monthly payments, you can potentially own multiple properties using leverage. Earn additional rental income. Most investors rent out their leveraged properties, which normally covers the cost of the loan plus some additional profit. Protection against inflation. Real estate is generally a good hedge against inflation. For example, although prices around you are skyrocketing, the fixed amount won't change with inflation if you have a mortgage loan. Although there are several advantages of leveraging real estate, that does not mean there are not any risks. Here's what you need to know about the potential cons of leveraging real estate. Positive cash flow is not guaranteed. No matter how you finance a rental property, income is never guaranteed. For example, what if your property is vacant for several months on end? What if you have to lower rental rates so much that you can't keep up? There are many factors to consider before purchasing a leveraged property. Investors need to develop a plan and thoroughly research property locations before they invest. You may lose assets if you cannot pay. If you cannot pay for a leveraged property, it could face foreclosure. Then, if the property doesn't sell for the total value, lenders can come for your personal assets. Additionally, foreclosures can plummet your credit score and affect your ability to get loans in the future. Property values could decrease. Finally, just as property values can appreciate, they can also decrease significantly, depending depending on the housing market. If your property declines in value, it can become challenging to keep up with loan payments. Unfortunately, if you owe more than your property is worth, it can send investors into financial distress. If you plan on using leverage to grow your rental business, there are a few things to keep in mind. After all, rushing into a significant financial decision can do more harm than good. So here are a few tips for using real estate leverage to your advantage. Use cautious numbers to calculate cash flow. Use more conservative numbers to estimate your cash flow. In other words, assess finances using low rent amounts and high expenses. Don't try using no down payment. Leveraging real estate without a down payment is risky for you and the lender. Instead, use a down payment to ensure you're not over-leveraging. Buy your first properties using less leverage. If you're just starting out in the real estate business, don't use as much leverage as you can. Instead, use as little as possible to figure out the fundamentals. When you own a rental business, several aspects need full attention at all times, including property management. Managing several properties while handling finances, new tenants, and lease contracts can be a lot for one landlord to handle. Therefore, savvy investors choose to work with a full-service rental management firm to maximize their rental portfolios. For more advice on a variety of other issues important to the rental industry, subscribe to the Bay Property Management Group channel, and don't forget to hit the notification bell so you never miss out on exclusive content. Also, be sure to check out our blog via the link in the description below for tips on utilizing leverage, along with everything from home maintenance to financing your first income property purchase. If you liked this video, please give it a thumbs up or leave a comment down below. Thanks for watching, and we will see you in the next video.